Good morning, everybody. This is Dee Dee with Power 3 Trading. Thanks for joining. I'm not here just to teach you to strat, but to teach you how to profit from the market using the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith, at Smith's in the Black channel, Rob in the Black on Twitter, or at sepiagroup.com. All right, so yesterday we got some not so great news regarding the consumer price index, CPI numbers, measure of inflation, 9.1%, which I think when they stripped out energy and food, it was still up there at near 6%. And yeah, so we were looking at the market and saying, okay, well, it's going to gap down. My question was, is it an all-day puker? I don't know. My guy, Jim, one of my followers here says short squeeze. So what we saw here was the market, and this is IWM. All right, we charted this. Let's look at it here. I'll blow it up a little bit. And so we said, okay, we'll draw broadening formations, the high of this day back, the low of the day back, right? And then we had some other two down. We drew the broadening formation, said if price trades down, take the two down, because this is a two down. So 2-2 continuation, have to take this range and then this range. And so we draw broadening formations to the downside and of course to the upside if price took went two up, so it was two down, two up, then it would have to take this level here and of course those levels. Well, the market gapped down, guys, but it didn't stay down. Why? I have no idea, because now it looks like it wants to trade down again. This is what you have to deal with if you are a day trader. You have to be patient enough to wait for your opportunities, because we don't know what the market's going to do from day to day, moment to moment. All right, so 15-minute close, 18-minute close. You had the price action traded down. I mean, gap down, traded up, right? Gap down, two down, two down, two down, two down, and then to the upside. It traded back inside this range. If you're a daring person, you could have taken that, right? And then you would have used this two down candle as your stop loss. You could have entered here. Price action traded up to this next broadening formation that we had drawn. You're feeling pretty good about this move, but CCI, it's not moving any further. It goes inside, then comes two back down to the downside. You must exit. So if you're taking this move, you got two down, two down, two down, two up, triangles complete for the day. If you take that position, then you have to be prepared to exit. You can't hold these if you're jumping in on these moves early in the market, because we're not sure what's going to happen next. And then you have your 18-minute flip. So this is your 18-minute flip. Like I said, every 15, 18 minutes, I'm looking to see what the market is doing, especially in the first 90. Once price, and we'll talk about this, once price goes inside 90, then you're looking at the 60, 90-minute flips, okay? Because you do not want to get trapped. All right, so in the first 90 minutes, I'm looking at the 15, 18-minute flips. What's next? What's next? What's next? My goal is to profit from the market in that first 90 minutes. All right, so here we go. Next 90 right here. I'm sorry, next 18 flip. Price tops out, and that trades back to the downside. When the market goes red here, because you're still, so in Dee Dee's world, I'm not taking this to the upside. I'm looking at to take this to the downside, because my CCI is suggesting there's still an opportunity here to trade it short. So this is my 18-minute flip. It goes red here, crosses back below zero, back below, turns this red here as it crossed back below here. Opportunity to enter here right at the top of the hour. So I'm waiting for the top of the hour, because right, this is the whole 30 minutes. So you're green on this 30, wait for that 30-minute flip. You're red here on the 18, take that short. This becomes now your stop loss. You don't, price has to stay below this broadening formation. All right, otherwise you got to get out of this position. All right, so it stays low here, trades up a little bit. You got a 2 up, 2 down, 2 down, 2 up, 2 down. It trades back to this lower broadening formation that we drew earlier in the day. Now, again, you have to think, price has to stay below this range. If it doesn't, potential for it to go back to the upside. Here's your flip. So it trades down, 18-minute flip. And you can see it traded back inside. And this last 3 minutes of this candle trades back inside and back to the upside again. She goes, right? So if you had taken this short here, you have to exit. Price trades back inside this range, right? This is how broadening formations help us, because you're training your mind to understand price action, and you don't get married to trades. You don't hope, wish, guess, think that price is going to continue to go your way. We saw the CPI number, and in your mind, you could be thinking, oh yeah, market's going to tank. Well, it didn't. And so you have to look at price action as the truth. What is price telling you? Well, we're going to go up this way. No, we're going to come back down this way. No, we're going to go back up this way. All right. Don't get married to these trades. I use the broadening formations to help me. It comes back inside that range. This is over. CCI, this is over. Cross back up here above negative 100, and it crossed over here in this range. The short-term trend here is over now. Now you're looking for longs. Crosses back above this range. This is right at the 60-minute flip, guys. But think about it. Well, 60-minute flip didn't happen here. But think about what this looks like. It opened, price opened here at this yellow line. You're green on the day. This is just putting you back into time frame continuity for the day, not the month, not the week, but for the day. Okay, and so you can take this position. You can go long here. You're back inside this range. You're green on the day, and you can take that position here. Now, again, using this as your stop. Well, it blew through it in this 3-minute candle, and it continued, it continued, it continued. Now you're waiting for your 90-minute flip, right? Because this is the 60 here. This is your 60 at 10:30. Continue, continue. You see price action coming over. I mean, trading kind of in a tight range. It's above 100. It crosses down here. Now you're looking to exit this position, which is what I would have done. It went outside, continued, but you can see it struggled to create a new high with CCI. So again, just training my brain. This is crossed over. I'm going to take profit on this. I'm waiting now for the 90-minute flip. It happens. What's happening here? Maybe you can get in here, but price doesn't create a new high on the CCI. Maybe there's an opportunity to take that up, but look at what you've got here. You have a nice big range here, 2 up, 2 up, 2 up on this 90. So we're going to be careful. So if you were to enter here, take that high, and then you see this inside bar coming in. Now you're paying attention, guys. You start to see these dojis form. Let me see what that looks like on a 15. You start to see these dojis form. That's an indication of some exhaustion. It goes 2 up, but then here's your 15-minute flip here. So just be careful if you are trying to take these continuation patterns after you've had some big moves. You're like, you're gonna get a TTO. And so you got this reversal here in the 15, inside 90. Maybe you take that, maybe you don't. I'm out, I'm waiting because this is inside 90. waiting for the next 90-minute flip to see if there's an opportunity. But you could have taken that. But hindsight is 2020. I follow my rule and I just say, yeah, it's trading back. It went 2 up, trading back inside 90. I'm just going to hold off on this and wait for a 2 down on the 90, which we really didn't get. You didn't get, you got it on the Qs though. Let's see. Aha. All right, we'll talk about that. Let's look at the Qs real quick. All right, but I hope you can see that there on IWM, you know, looking at these price action and using those broadening formations to help gauge magnitude, because, and then we could have probably drawn another line to see this. I did not draw that in the prior day. We had a 2 up. No, this is a 2 down, but we could have drawn a line there on, let me go back to the 18, and that bet it would have hit it to a tick, because we had this 2 up here at the close, and we would have drawn, I would have had to go way too far back to try to capture that. And there, yeah. So to try to capture that, and then you would have, again, magnitude, you would have seen that if we had drawn that other broadening formation. But that's the beauty of drawing those broadening formations. You'd have seen that, you would have looked at how price is trading back inside this range, cross back over, short. And look where it traded right back down to that level, profit. Now you're stuck in this range, and you can just see, actually it looked pretty cool. It just traded up against those ranges. Financials are missing, Jim said. Both JP Morgan and what was that, Morgan Stanley, both missed. Okay, so let's look at the Qs. No. Let's look at my fave, and then we'll move on, because I totally missed it, but I wanted to show it to you. Very frustrating, because I had some other stuff going on. But very similar, price gap down, right? Trade it back above this. Okay, I drew this on a different chart. That's some old stuff. I drew that on a different chart. So anyway, so price gap down. Again, this yellow line is our open. Trade it 2 up. So we had a 2 down, inside bar 2 up. If you're quick to the draw, you could have taken that using, but you know, this is Tesla. So the risk is a lot greater, right? This range was, the low is 675, high was 683. I mean, come on guys, that's a pretty big range, right? You're looking at $8 in a 3-minute candle. So to trade this Tesla to go long here, boy, you'd have to really probably use your percent of your portfolio as a stop loss on that, because there's no way I'm holding this for $8. Right, that's a big range. So if you were to get into this on a 2 down, inside 2 up, green on the day, you just have to probably use your percentage as a stop loss. Now it did cross over. Hang on a second, guys. It did cross over our broadening formation, I believe. No, we did we did an outside bar. 685. Yeah, right there. All right, so yeah, that's what we did. So once it crossed over here, if it had come back inside this broadening formation, I would have taken my stop. I forgot. I drew this on a different chart that has some other stuff on it. So anyway, so we trade this up. I did not. I actually didn't. I missed the whole thing. But here was where I wanted to show you. Once you get your inside bars on the 15 or the 18, let's see what that looked like on the 15. So on the 15, you had an inside bar, and it went 1, 2 down, right? 2 down, not a reversal, TTO, rev strat. So if you were on the 15-minute, you're looking at this on every 15-minute move. Here was create an outside bar on this 15-minute flip. I did not like that. Then I had this 2, then you had this inside bar, you had a 2 down bar. So I'm just waiting. Now you're at the 9:57, 10 o'clock flip. So now we're just waiting for the 10 o'clock flip. I didn't care for this move here. Waiting for the 10 o'clock flip. Now here's what you saw in the 15-minute. It went inside, then it went 2 down. This will get you every time you think it's going to reverse, only for it to do rev strat continuation. On the 18-minute, you did not see that 2 down. You had the inside bar, and then you had your confirmation right here as CCI cross above 100. 18-minute flip, 10:24, right before the bottom of the hour. I was so going to take this, but I missed it. All right, so by the time I saw it, price had already traded way up here. And remember, when you're in this situation on a shorter time frame, and you look at, you had 2 up, 2 up, 2 up, 2 up. By the time I saw the move 10:33, you had already missed this, guys, which is why I love the 18-minute flip, because these moves don't always happen right after the flip. They happen sometimes before the flip. All right, so this is right at 10:30. You get in here. This is 10:24. You get in here. Here's your 10, 2 down, your 2 up, your 2 up. I'm probably, maybe I would have waited. I don't know. But you have 2 up, 2 up, 2 up. I want to get in at this 2 up, guys. The idea here is you get into these trades as early as possible to minimize your risk. That's what this is about, minimizing your risk. But once CCI turned up, I probably would have waited. But you had your 10:30 flip, boom, you would have made nice profit on here. But I missed it because I was looking at this guy. And yeah, 0. What the heck? Sorry, something just flew inside my window. I'm trying to figure out what that is. So here you go. Here you go. You take that broadening this move here. So yes, I probably would have waited. Take this move here and use that as my stop loss. All right. So what else? Let's look at today. That's getting a little busy. This has been a crazy chop, volatile year. So this is our daily range. And you can barely see that maybe, but this little orange line. So price action traded up on the day, failed here. This was our, we had drawn this horizontal line at the low here because this was a gap. So we're still trying to take this gap. We cleared it here, came right back down. Price traded up yesterday, did not hold, traded off toward the end of the day, guys. So what I'd be looking for today is, does the market trade lower? If it trades, takes this low, then we're looking to take out this outside bar. But today also starts a new 2-day flip. So what that means for me is I absolutely do not want to be caught in this range. All right, so we really want it to trade lower, not higher per se, because then you have to trade above this range. I want it to trade lower. And then here's our 3-day, right? 2 and 3-day flip today, guys. Today's the 14th. So I'm looking for price action to trade lower, but it may or may not do that. So we're going to be careful. Let's look at the SPY. Same thing, right? We want price action to trade lower. Pre-market, the SPY already is, probably because of financials, right? Price is already trading below the 3-day low here. And so that's gapping below yesterday's low. Okay, and so right at this broadening formation, guys, looking forward to take out this range, 372.90. So we'll see if that holds on the SPY, and then and then we'll draw this way. And it's going to be close. So yeah, 372.90. It's just got to take that level out, and if it does, if it takes out this level, 372.56, 370, right? So if it takes out this range here, 370, it's got to take this guy out. And I'm going to move this. Let's see what that looks like. Yeah. All right. So if it takes out 372.90, then next level is around 369. Just looking to target this guy here at 370.18. Okay. So if you're trading the SPY, you're looking at the small cap. Let's see what that looks like. It looks like it's our poised to take out yesterday's low as well. And then you're inside this outside bar. So we're going to draw this here. And so we'll look to take out, if price trades below this range, you have 167.66 here, and then 166.73. So we'll call it about 167. Yeah, on IWM. All right. I don't have anything on my scanner list here. And we'll look at JPM. Looks like it's gapping. Let's look at JPM. And on the economic front, there's not a lot of data. I'm sorry, a lot of news. Producer price index, PPI, is at 830. They're giving it a high impact to the market, so we'll keep an eye on that. Obviously, cost, right? And that's going to be the theme for the back half of the year, guys. We're getting ready to roll right into earnings season kicks off right today. And so let's look at JPM on a broader scale. Oh, wow. Okay, well, we're going down. But if I'm not mistaken, Jamie Dimon had already prepped the market for what he believed was going to be a tumultuous back half of the year. So if you see this on the monthly, right, it's got the November 20 low of 97.86. So it's inside this range, guys. So that's going to be the target for this month. We're already 3-2. We're down on our 3-day. Yeah. And let's look at this on a weekly. Let me just blow up the weekly. We had a gap here. All right. So we're looking to fill this gap. This was November 9th. Yeah. All right. Playing JPM to the short side, guys. I'm going to do it that way. Let's see. All right. So this is a 2 up. This is a 2 up bar here. So this was this gap on this weekly. And so we're going to look at 103.87. And my mind is thinking, do I want to swing this? For next week's weeklies, not tomorrow though. Next week's weeklies. for JPM to close this gap right here, guys. The high is 105.10. Be looking at 104, right around 104 for next week. All right, so it's definitely going 2, 3, 2, 2 down, it looks like today on the week. Let's chart it. JPM. Let's start here. We may have to go to our daily view since we just saw that on a weekly. Yeah, we're gonna have to go way back. All right, so we'll just draw this line here for now on this daily chart, right? So we know we're going to short below this level here. Let's see where we are here. We got to go way back inside this gap. All right, so this green line is where it closed yesterday, which is 111.91. So 110.35, it's already below that range. So, and here's another gap here. So let's see, we draw this guy. On 1268, on 1266. All right, so we know we wanted to trade below that range. Where would that put us? Yeah, there you go. On our weekly 105, 105, we said 105.10 was the high of that week. Yeah, that makes sense. Let's see what we can do today, though, since we are inside this range. Well, that'll put us right there as well. The low is 105.85. The high here is 106.43. High here is 110.32. All right, so we're going to cover, I'm just going to draw a horizontal line on, sorry, I've been doing some other stuff, so my colors are a little off. All right, so we're going to draw 1010. So it closed at 111.91. So if it stays below this 110.32, which is high of this gapper, we're definitely going to be in this range. So we're going to get short. It already is in this range in pre-market. And then I'll draw another, just a horizontal line here at 106.43 for our day. So here's how we're looking to trade this. If price stays below yesterday's low, so below this range of 110.32, then we'll look to short. We have this range here that we need to take out. I'll just draw a line, another horizontal line here. So take this will be our first level here at 109.30. Remember, it's JP Morgan, so it's not a big mover. You know, take this low here, and then we'll look to take this low here. So we'll see what happens because it's trying to fill this gap. All right. So we'll see what happens with JP Morgan. And then, of course, if it trades higher, we'll just draw our broadening formation like such. It's got to trade above this level here, which is our inside bar, for me to think that this is going to go higher and go 2 down, 2 up. So above this range here, above this broadening formation, take that out, and we'll just look to tick this up at these two bars. Okay, so let's see what happens. Oh, I'll write it up. So we're gonna short, because remember, this was a gapper. I mean, this is earnings. So this is news. So we're gonna short below yesterday's low. 110.38 with, and we need the broader market too. So with JP Morgan, check out the SPY on the 18-minute. So check out the SPY, see how it's trading. JP Morgan may be actually leading that SPY down. So let's keep our eye on the broader market. And then we'll go long if we see a reversal here, because remember, this is a 2-down candle. So it's got to take that low of the day. And so we'll go long above this range. We'll call it, because we have this 3-1 here. So we'll call it 112.10 with CCI above plus 100 on the 18-minute. So looking for our CCI to confirm the momentum on these guys, right? So we want CCI to confirm the momentum. Short below -100, long above positive 100 on the 18-minute. If this thing's reverse, we want it to cross above 0, right? So if it gaps down and then reverses, I'm looking for CCI to cross above 0 for continuation to the upside. Otherwise, it may just get stuck in this range and chop us up. Okay. All right, we'll wrap with our scripture of the day, or our favorite scripture to end with, Proverbs 21:5. The plans of the diligent lead surely to poverty. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. So just be careful with this. Wait, because this is a gapper. All right, so Tesla may open inside and trade down. Right, that's a different look. Gappers, for sure, we want to wait because we don't want to get stuck in a potential reversal after it gaps down. Okay, like we saw the market do yesterday. All right, so let's wait. Let's use due diligence and be patient. All right, thanks everybody for joining, and we'll talk to you again tomorrow. Take care.